What? Is that our Mike? Our Mike the Spike? Man! Long time no see, brother. Glad to see you. I'm following you on Facebook, so I see all your updates up there. But good to see you in chat, buddy. Man, crazy 24 hours, right? So FOMC did not disappoint, guys. When we talked about, one of the biggest things we talked about yesterday was what the FOMC's role and job was. And, I kind of mentioned yesterday, their job is going to be to stabilize the economy. If they come out with, language about that's exactly what they're going to do, and they're going to provide this, and they're going to extend things, and it's going to go up. And that's exactly what we saw. Now, this morning, we've had that reversal. And again, feel good FOMC notes, spike in price. Reality of the situation, nothing's really changed nothing really changed. Brings it right back down to where we were today. So again, two great trade setups, longs and shorts in this one. It's been a kind of a good 24 hours worth of trading. All right. So as far as what's been kind of the consistent moving now, if we look across at our 24-hour pip changes, you can see we really don't, it's not like blowing things out of the water, right? Euro is up 23. Not too much, right? Pound dollar, 58. And again, we've been seeing that pound strength all week. And do we have pound strength today? Absolutely. Up 60 here, or up 59 in 24 hours. You're seeing the euro pound is down 23, and you're seeing the pound yen up 66. Now, that's 66 and this 60 over here on the pound dollar. I wouldn't say that those are mind-blowing numbers, right? They're definitely not getting anywhere close to the ATRs that we're used to seeing. But again, it is just giving us more continued pound strength. And again, kind of euro weakness, but again, that is a little bit, kind of tepid back and forth. So, we've seen some other things. Dollar Swiss obviously continue to push down 32 pips in the last 24 hours. That one actually did have a bit of a rally up, but again, barbs back and forth. I said that, I would continue to be short that one. Dollar CAD up 54, which is, that's a little bit more than I thought we would get out of today. And again, I don't know if you guys saw that oil number yesterday, right? Look at this. Huge number. Huge miss. Now, the interesting thing about this was an absolutely huge miss, but how much did oil move? It moved like nothing, right? There was no gigantic response. It's like, man, you were off by like 10 million barrels and nothing happened. So yeah, it just shows you where all eyes were focused yesterday. And really, at the end of the day, was that much of a surprise? Was there much of a surprise? And, I think it probably did surprise some people. And that's kind of what we've seen, right? And then euro pound also up, or down just a little bit. So far, this morning's news is the Swiss had this good, economic barometer. Again, it's not something I typically follow. It was better than forecast, though. So again, that is probably helping, kind of tepid that one a little bit. German preliminary GDP, though, was bad. It was definitely bad, which again is going to put a little bit of a damper on the euro. There's just no ifs, ands, or buts about it. You expected bad, and it was worse. Now, we have the 830 number today, the advanced GDP number, and it's expected to be minus 34%. So, I'll tell you right now, in the grand scheme of things, does that 34% really change our everyday lives? The answer is no, not so much. But it is such a large number, such a large percentage. And I'll tell you, the media is going to be all over it today. They are going to be, that's all we're going to hear about, The economy's down 34%. I mean, it's going to sound like an absolutely huge number. But is it really changing too much for us? The answer is no. I mean, we still have our goods and services. People are still buying things. Consumer confidence is still what it is. So again, I think that'll be what the news gravitates towards. But I think the unemployment claims number, I think is going to be the bigger the numbers at that point. It's supposed to be, 1.4. It was supposed to be 1.3 last time and came in high. I think we could potentially have another high, a little bit, another push above that this week as well. I think they've raised it. But remember, this is also first claims. It's not continuing. Okay. So these are the people that got, kind of laid back off again and, are putting continuing, or new claims in after being laid off yet again. Okay. So, but again, with a negative 34, and if we get this 1.4, 1.5 number that pops, I would expect a negative day today. And we've seen the overnight, we've seen the overall, at least the S&P has just been like kind of just hammered through the floor, right? And a lot of that is adjusting for what we're about to see this morning. I mean, it's, they're moving it before. It's like, wow, yesterday was great, but today the reality sets back in that, GDP is down 34% and unemployment is going to be 1.4 mil, potentially new people. That's what they're forecasting, right? We're stacking those people back up on unemployment. Big question is, we still don't know the full reaction of the stimulus, right? I haven't gotten the latest. Let me see. Yeah, I mean, uh, yeah. So if you search stimulus, the last thing that I got was a hit from 1 hour ago that talks about these two bills aren't mateable, Republicans and Democrats at odds, and we knew that was going to happen, but something's going to happen. It's got to happen, by the end of this week. Um, and 9 hours ago, second stimulus checks may be higher than $1,200. So yeah, I think they're gonna have to do something. Because here's what's gonna happen. If they don't keep people home, people will go out again. If they're not paying people, and it's not worth it, then people will risk it. At the end of the day, it comes back down to how do you feed your family. And if I can't afford it here, I'm gonna go out and find ways to make money. I'll find some place that'll hire me, and I'll go out and I'll do things. And it's it's all about motivation. So hopefully they do something good. The interesting thing too I find about this is they are so far apart. With elections coming up, I mean, obviously, if you are the one that is creating the bills and coming up with a solution that everybody is happy about, that will obviously pave your way towards more success. I really don't see either side jumping across the aisle or finding something that everybody's happy with. I just don't see it, and I think this is the opportunity for them to do that. So yeah, nothing sitting there yet. Kind of funny. I actually expected we see. I expected we see more by today, but not so much. You get money for nothing. This must be paradise. Yeah, I know, right? Um, yeah, it popped up. Yeah, I mean, alcohol, brother. Alcohol. There's always a space for alcohol. That's what I said. Alcohol was considered an essential service. You may not be able to go get your hair cut, but alcohol is still good. um, all right, so that's what we got for 8:30 today. Again, Chinese manufacturing will be good tonight. Like I said, we will see, we'll see some stuff again tonight with the Aussie dollar again. Manufacturing is always a big driver of economic resources, commodities in particular. So again, see that tonight with the 9 p.m. numbers, and then tomorrow morning, again, there's nothing really until we hit that 8:30 figure for the CAD GDP number. I think the CAD GDP number will be interesting. It is a month over month reading, and typically there are two things, right? We have month over month, we have quarter over quarter, and then year over year. Month over month will kind of give us a little bit better of an insight of how Canada is responding and how their recovery is looking. I can tell you right now, my wife's family is all in Vancouver, so we keep getting updates from there. And one thing they keep mentioning is they're like, oh, well, we had, 65 new cases today in Vancouver. It's like 65, that's it? Really? I mean, even in places here that are considering it like non-existent, they're like 65. And Vancouver's a huge city. I mean, it's a very, very big city. But they're not having the same, type of spread and same type of impact. So, just because we are doesn't mean that every other country is. Now, I will say another thing. I know you guys, I mentioned yesterday that I have actually two gigantic kind of education summits coming up. One of them I'm actually doing the talk on gold and silver. And it's interesting. Found a report yesterday for some like kind of empirical data to kind of back up my the speech. And it basically it shows the flow of oil from country to country. Where it's being sent, who it's coming from, how many millions of barrels, or how many thousands of barrels, I guess it is, back and forth. Very, very interesting. Very, very interesting, I got to say. And then the flow coming from Canada. It definitely it kind of makes sense why they are so why their economy and why their currency at least is so dependent upon oil and fluctuates back and forth with oil. So again, they are they don't necessarily have the impact, but if countries don't need it. I will say, you guys know, and again, I'll cover this in the oil section, but you guys know how I was very much, I'm very much kind of like a longer term bear with oil. I just think that, a lot of, $100 oil, I just don't think there's anything that justifies it anymore. Found a very interesting statistic, and I couldn't wait to tell you guys about it. So, in this report, a specific individual, I'll save it for, who that was in the report. But yeah, he basically said that the top of oil may have already hit. We may have already peaked in oil. It may be nothing but down for the future. And it's interesting. One of the number one consumer, it's not the number one, but the second place for the amount of consumption, the number one person for growth, but the number one country for the second most, I guess the largest volume country for consumption, the number one in growth, is also the number one country in renewable energy development and production. and they're expected to be over 50% in the next couple of years. So it's like the biggest driver in oil demand is also the one that has the most renewable kind of energy focus. So it's kind of like, man, that growth is going to get completely sucked out rather soon. So yeah, kind of interesting. And like I said, it's not just my opinion. There's actually reports now, and this report was actually written before COVID happened. And then the comments from this gentleman obviously are now like, listen, we need to adjust the report for next year, but yeah, I don't know if we'll ever get back up to pre-levels in oil. And I was like, wow. It's like I can't wait to tell the guys that. So really, really cool stuff. But again, I think that will have some effect on the CAD tomorrow as well. As far as saying, hey, listen, they're positive. That's great for CAD. But remember, if nobody's willing to buy your goods, right, lumber and oil, it doesn't necessarily help your GDP as well as your currency and your overall markets. All right, so just watch that. I also think personal spending will be something to look at tomorrow. It's supposed to be, again, up 5.3%. It's down from what it was before. If this is negative, then it's going to be an issue. And they will bring it up in the media tomorrow, and it will, cause some of the driving forces. But personal spending, Chicago PMI, which is kind of an intermediary release, and then revise U of N consumer sentiment. Consumer sentiment is always big. That's what drives the economy. I would expect that this number is not going to be good. They've already predicted it to be 72.9. But because we don't have an approved stimulus, I feel like this consumer sentiment number could potentially be a miss to the downside, which again, extremely negative kind of sentiment on that one. A bad consumer or a consumer that is not confident means that they are not spending money, which will, again, that's how you crash the economy. It's the easiest way to do it is basically make the consumer really nervous. A nervous consumer will not buy. And then it's basically just, core goods, and that's it. All right. So that's what we got the rest of today. As I said, for the most part, we'll have the GDP numbers, the unemployment claims. Again, this will kind of set what the media tone is for today. We're already seeing it crash back down again. And then again, obviously tonight, the manufacturing for China will affect the Aussie. Now, scanner-wise, guys. Scanner-wise, everything it's kind of almost what it was yesterday, right? Pound strength across the board. We're seeing Aussie strength minus the Swiss. And again, the Swiss is coming in because of the issues with the U.S. and China, kind of battle back and forth. So again, we're seeing those two things. Tonight, obviously, with Aussie data, the Chinese data, we could also get a kind of push up in the Aussie. Again, good manufacturing data if it stays above 50 or even 51 or 52. Again, that should stimulate this currency even more. Now, again, we are having a bit of a retrace back from those levels that we talked about yesterday, that 71.80-ish area. That was an area we kind of drove up to and then have pulled back. CAD-wise, because we do have CAD news in the morning, for the most part, CAD is weak across the board. Pretty much everything. Again, you guys can see that, again, CAD is in a secondary position, and those are all the positive ones, meaning it is weak CAD. Then the two pairs that it gets the lead, it is also weak. So it's kind of strength, weakness. Euro, I would say, is mixed. Euro is mixed, but I would not say necessarily strong. But there are some ones that are obviously, again, versus the CAD that is weak, it is up, right? Versus the Aussie, it's showing that it's kind of, it's more consolidating on the shorter time frames. But I would still kind of lump this in there as, although it looks strong here, we know that it's pulling back and it's red, so it's kind of a weakness versus the Aussie as well. As far as the majors go, and I'm doing this one less because this is kind of a mixed bag here, right? Kind of a mixed bag. At least in the last 4 hours, we've seen pound strength. Again, we know that. We've seen that in pound yen. We've seen it in pound dollar. We've seen some Aussie strength, but also dollar strength, but also some dollar weakness. So the last 4 hours, we've seen the dollar yen go, up, right? We've seen that, yen weakness that has come in. And again, that has also helped the pound yen, the euro yen, if you're looking at either of those two charts. Dollar CAD is an anchor break to the top side, which again, I actually really, besides being inside of a demand zone, which we had talked about yesterday, been kind of bouncing back and forth, I actually don't think a 63 pip move is justified right now. I actually really can't find anything news-wise or even anything inside of anything fundamental that I could say, hey, listen, I just don't see what justifies a 63 pip move in the last 24 hours. Obviously, over a market, sure, but I just, the only thing I can think of is the mention of weak oil is the only thing that I can think is really what drove this forward. Again, when FOMC mentions that inflation is being curbed by, weak oil, that's literally the only piece of information that I can find that would justify a 62 pip move. Now, again, 62 is the highest thing up here right now, right? What is earth shattering right now about Canadian news or the Canadian economy? Nothing that big, right? So I think it's just that one statement. Okay. And then Swiss, obviously, same thing. It is pulling back right now. Again, we have the dollar kind of getting some oomph right now, and New Zealand is just kind of tagging along. New Zealand is also considered weak versus the dollar, and it makes sense. New Zealand will also move a bit tonight, but not as much as the Aussie will. Okay. All right, so let me move the scanner out of the way. Get this out of here. Minimize this here. All right, let's go over into charts, and I'll show you guys what we got going right now. All right, chart button. Oh, by the way, guys, I'm going to take like a quick probably 3 minute break right before 8:30. The second boy has a telehealth appointment this morning that his mom scheduled for him, and he's of course at my house, so I need to make sure that he has my phone. So I'll take like 2-3 minutes just to make sure that he's on there. It's funny, I feel like doctors are like, "Hey, you can't see me," even though the appointment will take 100 times less, and I don't need staff to talk to you, but I'm still going to charge you a copay. So I just need a refill for a prescription the kids had for like a year, but they're like, no, we got to see him. I'm like, really? You just can't give him a refill with everything going on? But it's like a grab for copays, I swear. Anyway, so we're sitting here right now. Let's reset the timer. All right, so whoops. There we go. Reset the timer. I was like, why is it not resetting? So obviously here right now, this is where we were sitting last night. And again, yesterday, the same time. And what did we talk about? We were sitting up inside of this zone. Now, interesting enough, we talked about if we could get a spike up into the 72.47, we'd love a short. It was unable to clear this zone. So it's still stuck inside of this same zone. And again, this was based off of a 4-hour level. And we could see this big push up. And look at this. This thing literally turned, and for the last, 12 hours, has literally been pushing straight down. And it's only minus 28. Just didn't get the movement. And again, this is kind of that same gold play. Now, again, scanner-wise, what did we have? We have Aussie strength more or less across the board, right? But what are we seeing here? We're seeing some Aussie weakness kind of creep into the market. And again, it makes sense. I mean, again, we are very, very high on the curve. We are bouncing off a daily level. We had mentioned that yesterday, that there's going to be a potential short here. And literally, that's all we had was a little bit of a push-up. And like I said, here's where the I did it again. Here's where the 8 is right now. And again, we were sitting right here. So what did we do? We pulled back up, grabbed this level, pulled back down again. Right here, if you guys know what this is FOMC. All it did was punch a little bit higher, punch back down again, came back up, felt ready to go higher, right? And collapsed. Now, unfortunately, this one didn't give us the cleanest entry. We were looking for, typically when you see this type of a pattern, when this is all the spike that we got, that it literally collapsed back down again and came back up again. Again, there's an entry there. Unfortunately, there was not really the cleanest of entries. So most people would have probably missed this one. It's just one of those ones that have been hard. I mean, unless you were using the daily risk. We were looking for it. And again, Nadex-wise, if you had taken this one, looking for some type of a short position to the downside, it would have been great. I mean, no knockout on this one. Again, you could have used a longer-term binary. And the move total was about 57 pips. So even so, there was probably too much premium. I didn't actually look at Aussie before the report. There was probably too much premium jacked in. But again, we were calling for shorts. We got a short. It's coming back down. It did rebounce off this area, which again, this is a legitimate area. We had basing. We had a retest right here, right between the M and the little kind of the line here. And right now, it's grabbing things in the right area. Whoops, not that one. Let me pull that out of the way. I wanted this guy right here. All right. As you guys know, there's the pattern for shorts, right? So we are pushing lower. I would imagine this comes back down and does test these lower levels. I can see this being another issue right here, about 71.24. The reason why is, again, it was tested. It was front run. There's definitely some buyers sitting down on this level. So, one way that we could play this today, it's only about 20 pips away. Most likely, GDP and employment claims are going to affect it. Like I said, it's only about 7 minutes away. It's not really rallying into a zone right now. Even on a 5-minute, you can see we really don't have too much here. I mean, it's kind of pushing down, but it's a minor zone. It's not really something that we typically like to take for pre-news when it's kind of stuck in the middle here. It'd be much better if it was down here, but unfortunately, it's not. So, not really necessarily a news release, but we will have some reaction off of it. I don't know that I would take that one again there. I think I'd focus on this one. How much risk do we have in this? It's about 16. I don't know. I think I'd probably play this one more of a channel today, guys. If this level will hold, if this level does not, and again, ideally we want top and bottom for kind of news releases. if this 8:30 news doesn't mess up a lot of stuff, there may be a short off of this zone. Again, a reversal, kind of a push down, and again, if we kind of base and kind of turn off of this level, come back up, look for a push down back down to the 71.24. I think 71.24 will get hit today. Let's see hourly if we got a better top side. Not really. Yeah, I'll be looking for shorts. I think 71.24 would be a target today. I was looking more up top to see if we have a good entry. Probably again, the 71.79 or 71.79 is probably the way that this candle's form is probably, right here is going to be an entry for, potentially Friday if we can get a pop. It'd be great if we got a pop today. I would love that, right? That would be wonderful. But yeah, at this point, the big question is if this zone is going to hold. And if, again, we start to rally back up again, if the news does spike us through the top, again, look for a retrace and a punch forward. This would be a continuation. Again, it's basically a retracement is what it is. It would be along those lines. And when I say a retracement, is this a very fast, sharp drop? Yeah, absolutely. Those tend to retrace. Now, again, it's hit this zone once. It may hit it a second time and go down. Again, your target's 71.24. It may hit it a third time and go down again, but most likely it will break on number 3 on this one. And again, when it breaks, look for a continuation up. Your 1 to 3, as you guys can see, is before where the opposing level is. So again, your target on this one would be 71.73. All right, look at this, much flatter, right? Right inside of that zone. So here's where we are now. Here's where we were sitting yesterday. A little bit of a pop up, but look at this. Not much reaction. And what happened? Boom. Gold just dropped right down to that 74.92 area, that target level. I would say that this is probably more of a gold story than anything else. What is it? Proof of life. Even with the yen, again, we've been channeling. We mentioned this yesterday that we've been kind of stuck. And again, this was blue yesterday, but we've been stuck kind of in this area. I don't see anything that's going to keep us from continuing that, to be honest with you guys. I still think, when we get up into this range, up in, whoops, not that one. Now I'm moving stuff all over the place. I thought I had that one locked. I still think up here in a 75.38-ish is where shorts need to come in. Again, particularly intraday. See what the news pops in right now with, and again, we're in the middle, so I'm not interested in taking this for a pre-news release. But anything up into 75.38, again, sellers have really, and again, you want to be a little bit more conservative. Again, you may get front run, but I put yourself, 75.50-ish, somewhere in there. Like I said, there is risk that you could get front run at 75.40, maybe split the difference in here at 75.45. It brings you closer to this level that, again, was tested and forced down, and this all had an issue with. I think that's the intraday short today would be the 75.45. And again, targets down here at 74.92. Euro, yen. Actually, guys, what I'm going to do is I'm going to take a quick 1-2 minute break here. It's just a couple minutes before his time. I want to make sure that, again, he is logged on this appointment. So I will be right back in about 2 minutes. All right. So 1 sec. All right, I'm back. All right, yeah, they're on it. They're on it. Oh, my wife just messaged. She's like, "You don't need to take a break." Like, all right, no, we're good. All right. Whoops. What did I do here? All right, so I won't get yelled at from his mother. All right. So euro yen, very similar picture. Again, we didn't really, we got a little bit of a spike up, and then it kind of rolled over back down to the start of the move. I would say this one is more, again, this is more of a sideways channeling type position right now. I still like the 124.12 up top, obviously, because of what we had the basing here. Again, this is what turned it around. It ended up retesting. It got front run now. There's obviously going to be an intraday kind of more aggressive entry. Again, euro yen is one of those things that doesn't move, and then it does, and it gets pretty crazy. And as you can see, the ATR overall is coming down on the hourly. So I think 124.12. Again, that probably gives us the best opportunity. Again, maybe a little bit higher, maybe 124.16. Yeah, it's probably a little bit better of an entry. And then again, downside, I think 122.90. This level here up top has been hit a bit more. Again, we lowered it back down a bit. It took a little bit more conservative of a target. Now, if we do get up to this zone right here, this zone is located at approximately 123.90. If we're able to spike up here based off of this news, again, this could be a viable entry for kind of an intraday short. Again, obviously, U.S. market time, we're starting to ramp up and we're starting to move, and it's going up, 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 up. If we hit this level at 10 o'clock, again, take it for a short, roll back over. Target's down here at 122.90. Oh, I had to sneeze, and I was like, oh, God, where's the mute button on this one? The other one was very simple. I would just click the microphone itself, had like a button, and I would click, and it would light up red. And you'd be like, yep, I'm good. Not so much in this case. All right, so here's the pound, guys. So the pound yesterday, we ended up getting a push, and we talked about 136.43 would be kind of an area that we were looking to get short in. We had nice movement. It was tested. Again, here's where we currently are now, and we were sitting right about here yesterday. And what did we see? We saw a pullback of about 36. At its peak, actually, we saw a push of about 40 to the downside. We didn't make it all the way down to 135.80. And again, this is pretty much a typical telltale sign that, hey, listen, you may get something out of it. But, it pushed it, and then it stabilizes. And again, you can see the stabilization is right below the level that the level is going to break. Now, we talked about that. Again, we were looking for higher entries if possible. But again, there was a small short off of this one intraday. Right about here is where the FOMC came in. Again, it gapped down and came right back up and really didn't do much. It didn't affect anything for the most part. And again, what was this spike this morning? Well, this was the European Open push forward. Again, European-based news. So right now, what I would say is, again, we obviously have to adjust this area. I'll bring it up to a 4-hour, and you can see on a 4-hour, this is a zone that's been pretty big, and we're entering it right now. Okay, we've just hit it over here at a 136.99 or 137. Let's see actually if we can refine that a little bit. Mark it here. Let's go down to an hour. Oops. Let's see if we can get a little bit better of a. Yeah, that's not bad. So we'll put it. You know what? Let me change this real quick. We'll do that. We'll make it thin, just so it's not super obnoxious. And we'll put it right there. Take that off. Delete that. Boom. All right. So there we go. Much better. So 137.16 is where the entry is for today. And again, nice burst off of this one. Those typically tend to retrace. The risk level on this one, though, it's about 28. So while that's the best level, again, we may want to take this a little bit smaller. It's about 19. Take it from there. Yeah, we could do 20. So this is how I'm going to adjust the level. We're going to put it there. I'm going to move this across to there so you guys can see it. And I'm going to draw it right there. Okay, so 137.24 to 137.44. Again, a little 20 pip zone in this one. Nice little trade setup. Again, big burst forward, looking for a flip and turn back down. And in this case, the 1 to 3 is fine. I'd probably go a little bit further into this range. The 1 to 5 is a bit too far. I think it will have problems coming back down that way. All right, pound dollar. All right, so here's our drawing from yesterday. Now, we really didn't get the crazy movement. In this case, it kind of went above, and I would have to move this over. Right, we had to move this over, and now it's pushing higher again. And, it's coinciding with what we had talked about. It has pushed higher. Again, here is the jump. I missed it by 6-8 candles. And again, we still have targets a little bit higher. Right, we have targets up here at 130.91. So this one is still kind of in there. And again, dollar weakness on this. Again, advanced GDP number. That could move it. The advanced price index number could move it. The unemployment claims could move it as well. At this point, you are up about 45 pips. Make sure you move your stop loss at least to break even. There's no point in taking any risk in this trade at this point. Make it a free trade. Maybe even lock 10 pips into it. Just in worst case scenario, you only make 10. Oh no. But again, we're still looking for 130.91 on that one. Euro pound. Euro pound. Now, all right. So here's where we are right now with euro pound. Okay. We were sitting right here yesterday. Okay, right here. Now, We went all the way back up, guys, right? We went all the way back up, and we're looking to take this one short. We gapped into that zone, and as you can see, it did come back down. It never gave us the retrace, unfortunately. It went all the way to the profit target. It didn't give us the pullback. It just went straight through this morning. And again, the gap here, the gap is the FOMC notes from yesterday. All right. Which, again, shouldn't have moved this really that much. Hold on, let me make sure. Yeah. It shouldn't have moved it that much, and all it did was really drop it down, and it didn't really change any trajectory whatsoever. Again, just standard volatility inside of the market. Been a hard one. Again, it is moving. I still think 90.11 is where we're looking for this one to continue to push down to. It did have and again, there may be a continuation here as well. There is this kind of zone right here at 90.41, right? And you can see what it did. This is where its launch point was. It came down and hit, and it went through and then kind of pulled back to it. So it looks like if you're looking for a short, if we can get a little bit more of a pop-up again, it's a tiny zone. It's only about 7 pips risk. And again, there's about 23, and really you could grab about 30 out of this one to the downside. But again, you want to make sure your targets and you're out of this one at 90.09. I think that's going to be the safe bet on that one. Are we at a time we're going to flip around? Maybe there's a zone here. The zone has been respected before. Again, that zone comes in much, much lower. What I would look for in this case, again, from taking this kind of reversal here, right? There. What we need is the same type of bounce. We need to hit the zone. We need to kind of rally off of it, touch back again, and then take the break on the other side. So that would look something along the lines of, this. Okay, when that finally gets down there. All right. The entry of that one, again, is approaching this 90.09, and your profit target is 90.34. And actually, let me put this here so you guys are able to get a pullback to that one. All right. So again, perfect location. That's where we know the opposing zone is. Based off of your entry, again, you can snag in at the same exact spot, and that tends to be a pretty safe level. All right, for your pound. Going into tomorrow, there's really no early morning news. Let's see. About all we saw was there was news about 4 hours ago talking about skyrocketing unemployment is bad news for Boris Johnson. But if that's such bad news for Boris Johnson, why is this nothing but pound strength, right? So I feel like that's the media trying to make a mountain out of a molehill. I think recovery is more the what matters, not necessarily the unemployment number at this point, because people staying at home is not necessarily a bad thing. Going over the euro dollar. So euro dollar. All right. So on the 4 hour, we talked about having a clean push all the way up, and we were unable to get it. So this is what it looked like on a daily basis. We wanted to push all the way higher, right? Let's refresh the indicator. We wanted to push all the way up, and it just flatlined on us. Now, I'm really surprised we didn't get more movement on this one. I assumed we would have more than 22. We're sitting right here, right here, right now, and we were sitting right here this time yesterday. So we got a little push up, a little push back down again, and really nothing. So at this point, based off of what we've seen and kind of the threats out there in the market and this being that bad, this bad, I still think if we're able to break down below this level here, right? If we're able to break below 116.81, I do believe there's still a short down to 116. I do think we can hit that 80 pip move. Right now, I would say this is a non-trending market. It's just sideways. It's really not moving. We're more or less in the same area from where we were yesterday, right? We were sitting right here, and we're right here right now. So we did have a move up and a move right back down. So yeah, boo euro. Maybe we'll get a pop, but I just don't feel like there's don't feel like there's enough movement in this one right now. Yeah, still waiting for this piece over here. Okay, dollar CAD. All right, so dollar CAD. It definitely moved off the level that we had drawn. We talked about yesterday. It didn't go all the way down to the entry, so this was kind of a no entry. 133.05 is where we wanted to get in. It came back down. It grabbed this very, very tiny little hourly zone, and that was the rock. Right now, we've hit 1, 2, 3, and this one didn't kind of leave. So the next hit of this level here is going to be number 4. All right. Now we have pushed up. It is very, very quick. Typically, again, we'd look to see those retraces. We mentioned yesterday that 134.35 would be an area where we're looking to short, and we've actually touched that zone, looking to flip and roll back over. So I would say I would be short this position today, most likely. Again, over the last 6 to 8 hours, we definitely have gotten some big movement, more consistent movement than we've gotten really for the last week at this point. Again, this is straight up all greens, and you can see besides a spike up or down here, there's just not that much movement. So I'd be looking to roll this one over today. A potential trade entry, it looks up along those lines. All right, 1 to 3 is fine. 1 to 5 is actually fine. You want to make sure your profit target is hit before wherever you set it before 133.46. Let me check that employment claim number. Okay, so it was kind of a mixed bag today. Here's the number. So this one missed it by just the slightest of margins. It's green, but it's basically dead on. This number right here, the Advanced GDP Price Index, that's kind of interesting. And again, 32.19. It's positive, but it's like, ooh, it's positive, but it's positive minus 32% reduction. So it will be mixed. I don't think we'll get as much of a reaction today as we could have gotten had it been just slightly red on the other side. The media will still walk away with it, but again, it's not going to be, negative enough. It's kind of the same thing, right? This is technically green. It's a miss to the top side. But again, it's still minus 32. This one, we also missed, but we missed by such a small margin, and it's still 1.4 million new claims coming into the system. And again, that may be kind of what the market hinges upon. But overall, the fact that it's 2 greens, 1 red, everything they talked about yesterday, I actually don't think it's that bad. This may get, align with what the FOMC statement was. These are kind of things that, again, they could be taken in a positive light. It could give us, it could give us a little bit of a oomph. We'll have to see once the market opens, what the media spin is going to be on the whole thing. So again, I don't think that was bad for the dollar whatsoever. So we'll see. This looks like it's just giving us an entry here on the hourly. Again, we kind of pushed up and news kind of pulled us back a little bit. We'll see. Again, entry is just a little bit higher at this point. It was touched, but we'll see if we can get just one more little tick through for people that are not into the trade already. All right. Dollar yen. So look at this 30-minute flat. 105.57 was the entry. And here right now. Right here right now. And we were sitting right here. Right there yesterday. So did this one have earth-shattering movement? No. And why? Because the FOMC statement didn't really tell us anything we didn't already know. I mentioned them, backstopping, do everything they could. They did extend buying. What are they? The different the purchases and the overnight lending from September to December. They said they're still looking for maximum employment and an inflation of 2%, which we're not seeing yet. And they did mention oil being the reason why. So not too much change. Again, sideways market, didn't get our entry. I'd still be looking for shorts at 105.57 with targets down here at 103.34. So still bearish this position, but again, sideways movement, not interested. I want more than that. All right, so here is the dollar Swiss. So dollar Swiss is at 8 o'clock here, and yesterday 8 o'clock was right here, right up here. We just bounced off that level, and we talked about this as a short yesterday, guys. We said we had just approached that zone again, and there you go. Okay, there is your trade from yesterday. Okay, wasn't huge. You're talking about 40 pips. The secondary one was about 65 pips to the downside. It went down and you were out. As you guys can see, it rallied back up. I mean, it really didn't do much, right? FOMC was sitting right around here. We had a little bit of a gap, but it stayed. Nothing more. And again, we continue to talk about how this is a short position, the barbs back and forth. Now, I don't know that I would take that level again. Okay, we've had 1 touch, we've had 2 touches, and then again, yesterday in chart school was touch number 3. And we talked about how it rallied up really, really fast, and there was its response off. It'll be touch number 4 if it comes in again. And again, I really just don't like touch number 4s, particularly on a Thursday. So at this point, I would look for it to put some new lows in. Maybe we can get a little bit of an oomph. Maybe we can get some news, right? Some news would be nice. Give us a nice little candle. Give us a good entry. But again, the way that it's coming right now, it is pushing up. It has based over the last 4 hours. Maybe if we start to push down, that will give us a kind of a re-entry area. And even, you guys can see it here. Even on the 30-minute, it's not super clean. There's nothing right now. Really, there's nothing until we get back up to that same area, right? Nothing until we get up to this level where we were yesterday. All right, up at 91.88. So if you guys got this one, you're good. Otherwise, again, not much really going on with this one. Look at this flat line from, let's see, as of 11:30, we were flat. And you're talking about a 15 to 20 pip range. But 11 o'clock, we're in the exact same spot. No movement. All right, NQ. All right, so NQ. So here's 4 hour. Here is our 1 hour. All right, so what I mentioned yesterday, and again, I talked about this, that, again, I don't think there's necessarily The FOMC said what I kind of expected. I didn't expect them to talk about interest rates. I said they could, but I expected them to talk about how they were going to prop up the economy. So here's where we are right now, 8 o'clock, and here's where we were yesterday. Okay, and what did I say about this area? I said that 107.04 was an area we have to watch out for. This was an area of interest. If we could get a pop out of it and a pullback, which again occurred at noon, right? Here, I'll move this out of the way. But again, we mentioned that this area here was where we needed to turn around. I drew this thing for you guys yesterday. Right there. Here is your push up. Here is your push back down. And there is your continuation pattern to the top side. Right up to 107.04, which just happens to also be a level. Okay. And again, we hit that peak at last night about 10 o'clock. We finally hit the full profit target on that. Now, I've mentioned it multiple times today already. Once we get that peak, how are we looking to reverse? Okay, I don't know if you guys can see this or not. I will remove this. There's your hit of the level. There's your pullback. There's your retest. And there's your collapse. Back down to where we were. So again, here right now, here yesterday. Any movement? No. And this is why I keep talking about how this is a trader's market, not a swing market. Had you gotten long and didn't take profit target, we're in the exact same spot right now. Nothing has changed, right? And again, the FOMC statement, nothing necessarily changed. Went up, grabbed the level, came back down again, and has restabilized. No change whatsoever in the market. All right. So there's that continuation pattern. Again, we'll take this one off. Again, there was a long and a short both in this one yesterday. What I would say right now, based off of the movement we've had in the last few hours, it does look like it wants to retrace higher. But I would be extremely cautious because whenever you see this big down, big up, big down, big up, again, it's looking for areas of buyers and sellers. Now, there is a small level below that this level has just been smashed back and forth. Again, we've hit it here, we've hit it here, we've hit it here, we've hit it here. So as far as true punches down, you could say that this would be 1, this would be 2. You could say 3 and 4, but look how deep it pushed into this level. I would be very cautious about taking any longs out of this level. If anything, again, depending on how the media sways this, hey, we were only 32% down in GDP, only 32%, right? That could definitely be taken in a negative manner. Again, I would be looking for that same continuation pattern to the downside. Now, again, there is some buyers sitting right in this level, right about where your 1 to 3 profit target is. But I do still feel that, listen, if we start breaking below and this level can no longer hold, which I don't think it's going to hold the next time, again, I think targets need to be down here at 103.06. Again, for this smaller, the smaller entry, obviously, again, taking the smaller, your entry is approximately 104.94, to the downside. Now, the area of interest that we are talking about, the one that we got the bounce out of, the one that we, have been talking about it for a while, that's kind of where I see kind of the rollover. And again, it's going to need to come down and stabilize here first, but that will also give us a layer of kind of protection for the shorts here. All right, so just continue it across, guys. I think 104.94 would be the entry for short. If it does pop up, I'd probably be interested. I don't know. In the next 2 hours, if we can get a punch up, I think there is. I'll just move this one. I think there's some validity to this level here at 106.91. Again, it went up, it based in that level, dropped, and then retested, showing and say, hey, listen, there's definitely sellers here for another push to the downside. Again, very strong momentum off of that one too, which again, I am a big fan of that one. So again, shorts at 106.91 or shorts with a breakdown here of 104.94. S&P. So same thing, guys. Had that area of interest. We talked about 32.49. That was a level. It came up and it pulled back again. Pulled back about 12 o'clock, which again, it rallied back up at 1. Typically, when you see a punch this close and then another punch again before the level, that's a telltale sign that, listen, we need to be going long in this level, not taking it short. Now, it did rally up. We did mention that, hey, listen, this is going to, if it can come up into this level, we'd be looking for a short. But we got front run here. And again, when we got that stabilization, you need to switch it. Okay. Same area of interest that we had marked off over here. Same trade, basically. It punched forward. It retested back, went higher, went to a higher level, which this one actually didn't turn at a great level. So I did not participate in this down draw. But again, punch through with the news. We ended up going higher on this one. So I think that this one will also continue to push down. This one has now put a lower high in off of a big kind of spike. I don't have a great setup for this one short, though. I still do think any short targets need to be out before 32.06. But as far as a great level of entry, I just don't really see much. I would not be using this again. Again, area of interest wise, but we can probably just take it off now. Maybe here, maybe. I just don't like the movement. It's too small. It's not kind of explosive enough for me. About the only kind of intraday level would be in this area, right in there. And again, that's about approximately 3250 again, and that's the same thing we've been following, that 3250 level. That's about it. I mean, we're between sellers and buyers. Not as much. I think the NQ gives us better opportunity right now. Looking at the Dow. All right, so there was the Dow. So we are sitting right here. And yesterday we were sitting right here. Right here. So we talked about, shorts at, 126,667. Didn't make it. It ended up taking the aggressive basing level and using that as its kind of rollover point. Same thing. This one, again, never cleared that zone, never gave us the entry, and we didn't even have the Harry Potter entry on this one. But it took the aggressive. Again, I wanted the conservative, not the aggressive, and the aggressive is the one that won this time. And again, that happens. So missed trade for me. Nothing I can do about it now. But intraday, again, I do like the way, and I do like the movement off of there. So again, aggressive entry would be 26,543. Conservative would be 26,667. I'm sorry, 26,676. And again, long targets on this one. I definitely do not like this level. I remember we kind of dropped this down and we talked about where a potential long entry would be, and that would be down here at 26,059. We got a bit of room to run down there right now, but yeah, looking at that. Okay, now remember what we need for this. We need that touch, the bounce, the retest, and then the punch higher is what we need off of this level. If this one just goes in and goes sideways, this is a short trade, not a long trade. And then we will be looking to do this. Okay. Then we're looking to do this, right? But if it hits, pops, touches, then we're looking for the bounce higher. All right. So again, area of interest level. I think originally we marked this one off. Yeah, it's been hit a few times, so it's not the cleanest of levels, but we did get a nice reaction. So I'm looking for a confirmation entry long or a confirmation Harry Potter to the short side. Either one, same pattern. Hit the zone, bounce up, hit the zone, break, pull back, and then drop. And then again, targets downside are 25,562. I'm sorry, 25,526, and long side would be most likely 26,543. Now gold. Look at that. So gold really didn't do much. And again, because they talked about lower inflation, that's why gold is not breaking all-time highs again. So we're sitting here right now at 9. Yesterday we were sitting right here, right here. And all we did was we came back up at, FOMC time because wait a second, did they mention anything about stimulus? No. We're gonna hold the course, stay firm. And again, we came up, we stayed within that zone. It did not breach the top. And then we just pulled away. We're in the same exact spot. So, again, I would say looking at this right now, just based off a fundamental level, I would say I am bearish gold. Now, it is Thursday. I do expect stimulus, the final stimulus bill, or whatever the agreed upon stimulus bill, or whatever it's going to be. I figure today or tomorrow we are going to have to hear. They're going to have to approve something, right, in the next 2 days. They said by the end of next week, and tomorrow is the end of next week. I believe the stimulus bill is going to blow that top level up, particularly now. I don't think this level, because we pushed to the very, very brink. You guys can see we pushed all the way to the top of this level. It didn't break it, but we got super close. I don't think this level is going to hold as soon as they mention stimulus. So, if there's any type of talk of stimulus, the best bet on this one is going to be to either look for a punch and a breakout of this level. And again, your proximal side on this one is right around here, around 1972. The distal side of it, meaning the top side, is up here at about 1981-ish. I think if we can get a punch through, a break, or even if we just start to rally back up with the talk of the stimulus, look for a punch higher, a pull through, a retrace, and then a continuation kind of extension to the top side. But until we get that, I would have to say I'm more bearish than anything else in this position. I don't know that we'll get to 1906. It'd be great if we could, but unfortunately, I just don't think we're going to get that far. I think there will be the mention of stimulus before that. And again, stimulus is going to jack this crazy. Now, as you guys know too as well, the talk that I'm doing is going to be for gold and oil in the COVID-19 era. couple interesting things I found out for gold as well, talking about how it is a special type of asset that price goes up, with continued demand. It's a little bit, it's a different market than many other ones. I also like that in many of it's nice because I don't know what it's called, those type of tests. Like, those type of tests where you say one word and you say the first word that comes to your mind. There's a scientific term for that test. I don't know what it is. But if you say inflation, the first thing people think is gold. Or if you say gold, the first thing people think is inflation. It's actually interesting. It shows you what the rate of return for gold has been back to Roman times. And it's like 0.02% annually. Right? It talks about how people assume that it is a hedge for inflation when in reality it is actually not. But this is why, again, that's why gold is going higher, because it is a market based off nothing but speculation. But yeah, some great papers and things like that on there. So I'm going to definitely have to bring that up inside of that presentation as well. So it's purely a speculation mode that it is this high. And again, if we do not see that inflation, again, the target's supposed to be 2. Because of oil prices staying low, we're not seeing it, right? So again, bearish based off of a technical level, bullish based off of, as soon as we hear stimulus, everyone's going to be like, oh my God, they're printing tons of money, gold, 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 and it's going to jump. So just keep that on your radar, guys. Be cautious with any type of shorts in this one. But again, I am more bearish on a technical level. Now, silver, bam, look at that thing to the downside. And I mentioned it yesterday too as well. I just, there's nothing, when everybody's talking about silver, and right, you're hearing silver mentioned by everybody right now. Like gold, you guys remember what happened when they were like, "Oh, we're going to have ATM, machines that have gold in them that you can buy physical gold," and then the price tanked, right? So we obviously had a little bit of a spike. FOMC definitely jacked us higher, and again, this was to take out near-term shorts and longs, right? And we had a break through the bottom side. Now, did we get a retest either way? Not so much, right? I mean, we pulled across. We were sitting right here, right now. Yesterday, this morning, we're sitting right about here. And again, we pulled in. We never got the retest of the bottom. We pulled up. We didn't really. I mean, I guess we did. I guess, if we drop it down to a 15-minute. Here, let me pull this up. Here, let's pull these out of the way. You guys know it's silver. If we continue these lines across, did we get a? And remember, this is why I drew it top and bottom. What did I say? We need a retest in either direction. Well, here's where we are now. Let's go back and do this correctly, so nobody says, "Oh, you cherry picked this one." 8:45, and then we were sitting right here at 8:45. And what did I say? We need a confirmation. Here we go. We bounced off the level. We pushed up. We confirmed. And again, here, I'll draw it again for you guys. There's the move up. There's the confirmation down. And there's the punch to the level for news. And what happened? Boom, we came to the other side. There was your profit target. Now, what do we do on the other side? We did punch down. We just didn't get to retrace back up again. It didn't give us the second entry. But what did it do? Again, it went down to the 1 to the 5 and actually got all the way down to the 1 to 5. So there's your 1 to 5 target to the downside. So I got you 1 out of 2. There was plays in both directions. Again, a break above and a break below. There was the same confirmation entry, the hit, push above, retest, and launch. Okay, so there you go. There's silver. Okay. Now, silver also, I am on the bearish side. I do think silver will come back down to the 21 area. Stimulus is obviously going to drive it as well. Again, I'm going to start. I need to group these 3 things together, so I have to stop drawing it in 3s. I do think this one will continue to push lower. It's not going to be as insulated as gold will. Like I said, when you say inflation, you don't say silver. You say gold. Now, tonight, the manufacturing PMI data may actually help this one a little bit because, again, silver is used for, can also be used for industrial metals, for electronics, but it doesn't have the demand like in jewelry and stuff. It's just not as big. So, yeah, I would say bearish down to 21, 54, 55. There will be some basing in this level in here, around 2250-ish, right below where we are. But again, bearish technical wise, fundamental wise, I think we need to be long. I would not use this zone again. It's been chopped back and forth. The news has already happened on that one. I'm going to keep this so I can, get recordings of it for later. If anything, I think this level's fine. I was looking at that on a lower time frame, right here. I think 24.22. If we can get a spike into that level, there was a nice movement off of that. I think there could be an intraday short in there. There could be. If we're able to kind of rally back up again. I think next time it hits there, I think we will get a push back down again. Probably not today, maybe tomorrow, but if not, maybe next week. like I said, I expect there will be a pop with stimulus, but I don't think the stimulus is really going to change that much on a fundamental basis. I don't think they're going to be like, you know what, $5,000 check for every single. It's not going to be something like that. You know, obviously the coronavirus is still kind of manage this one. All right. Let's pull. Where is it? I'll just pull another one up again. Let's see. I have it somewhere, but I have so many windows open right now from all the research. Like I said, I've never done so much research in one day on just oil. It was kind of crazy. Trading view. Let's pull oil, and we can check out crude oil. All right. So let's give me the full featured chart. No thanks. I don't need it to be smarter. Bam. There we go. Oops. I'm like, wait, why is this like this? We'll just do regular candles. So, all right. So yesterday, guys, what we did, we were sitting, here we are right now. And again, yesterday we were sitting right around this level. And we talked about how much it loves this level. And really, we wanted some confirmations, top or bottom. Now, this one ended up going back down to the 40 level. It did not do it by news time. It took a lot longer. And in fact, you can see right about here, right? It ended up breaking through that level again. And what did it do? It retested back up, grabbed that same 41 level, and that's what continued to push lower. Now, seeing oil continue to fall is pretty interesting. So I like topside shorts on this one. Again, we talked about if we could be here for news yesterday to go long. We didn't. It just flatlined. It did absolutely nothing. And then it ended up going down, in the middle of the night? 1, 2, 3, 4, 5, 6, 7. About 8 hours ago. This morning at midnight is when it finally started to collapse, right? So, hide for now. The way that this based in this level, you got to be thinking that we're going to be down today, right? I mean, I'll continue this level across. We had marked off this level here, right? We just based in that level. It was a rally point here. It was retested. It got tested here. It got tested here. Again, here's 1, here's 2, here's 3. Bam, there was 4, and it based in that level. You got to be thinking short on this one. Like, there's nothing in here that says, hey, listen, this is going to go higher. Now, we did have price turnaround here at 39.80. And again, I think this one may finally be far enough away from that 41.05 level. I mean, it spent so much time in this level. I'm wondering if this is going to be that new level, that stabilization. And again, this will be the continued push to the downside. So really, besides this turning point here at 39.80-ish, there's nothing before 39.26. Right? There's nothing before 39.26. So that's about $1 move to the downside. I don't know. I'm not saying that it's going to move $1 today. It's a Thursday. But this could get some movement. All right? This can get some movement. And again, oil is not normally something that the Fed necessarily talks about that's keeping inflation down. That inflation's not there, and they're saying that low oil prices doesn't say a whole lot. 34%, unemployment, or 34% drop in GDP. Again, that's lower demand, which is also going to, continue to push this lower. I mean, look at the number we had yesterday again, right? We were down 10.6 million barrels off of inventory. They expected it to be positive like it was before. Where the heck is the spike? Where is the launch up to 50? There was none. So, to me, this leads me to believe that they already knew that what the oil numbers were going to be, and they were trying to over-manipulate the market. And that's why we're seeing price fall away now. Because if you can be that negative, be that short of inventory, and prices dropping that far, kind of tells you something, guys. Kind of tells you something. There should have been a spike up to 42, and there wasn't. It just continues to fall and fall and fall, and in the overnight fall. And now we're hearing news again, looking at that same, looking at the same bit here, right? Looking at the same bit, what are we seeing? Unemployment insurance claims, gross domestic product. We're talking about, the hottest news here. Unemployment over here. GDP is falling even more. So again, none of this stuff is really great. Greenback falling as well. So yeah, there's just not much there, right? There's just not much there. Let me put this over here so I can find it later. All right, so I would say, hey guys, I'm short. I think profit targets for shorts on this one would be 39.26. Again, if we can get a nice little pullback, that's where I'd be looking. If you're not already short, I'd be looking for entries in. As I said, here was that punch through, that retest back up to that zone. You may have missed it just by a little bit. In reality, I probably should have adjusted this zone into probably this range to get a better entry. And we've kept this zone from all the way back here. There are minor adjustments that need to be made from time to time for kind of reentries. But again, it was at 41.06 to 41.26. I'm sorry, 41.06 to 41 kind of 26-ish area. That was the punch through. Again, it held again, it retested, and that punched the other side, and we are below kind of where we're looking for entries at. All right, so we short this one. That would be oil. All right, so let me pull some of the other ones we had yesterday. Let me go back to that list. You wanted me to look at G Money. You were still all over the Bud, right? I'll go ahead and pull Bud again for you, and we can kind of again, I'm all about kind of seeing what happened and what didn't happen. All right, so Bud again, the essential service of alcohol. God, I hate when this chain stays like this. The essential service of alcohol. Right? So it had a good day. It gapped. It went up slightly. Up in that 56 range. It didn't end on the highest moment though, right? Right? This is what we had. There is your hourly. So, right? We talked about that gap up, but what did I tell you? You said, yeah, we closed higher, but what did I tell you was going to happen? Yeah, we did have a drop down. We did have a drop down and then a push. And again, that seems to be what it does, right? It moves in one area and then goes up. Look, up, back. All the way high, back, and then kind of push over it. But we're the exact same place we started. Now, this one's already red, and again, there's another gap up, but what justifies it? What's justifying it? Besides unemployment. Again, is unemployment good or bad for alcohol? Is unemployment good or bad, guys, for alcohol? Okay, now again, we're seeing something over here. Let's drop it up to a daily. I'm going to see what this one's looking like. Yeah, it's kind of hard. There's a big gap over here. So we got a bit of ways to go. Really, there's nothing sitting here until right there. Whoops. So yeah, we could have a little bit push up. 57.78 is the last time that we have a good confirmed zone on the daily. Whoop, no hide for now. So yeah, I would say we probably have a probably a positive day. And actually, this has actually already been tested once, but 57's been a day. Lower time frame again. Drop this down to 30-minute. Again, I wasn't overly impressed with yesterday, the movement. But again, alcohol. Go alcohol. Go alcohol. We'll see. I want to see if it bounces off this level off the top side. That is the big question. Where was it? I was trying to go 4 hour. That's what I wanted to see. Yeah, it's right there. Did it break it? May have. It's slightly above. This one is just there's so many gaps in this position. This is like the ugliest chart ever. Look at this. So ugly. There's so. Look at this. Gap every single day. So ugly. All right, what was the other one? There was another one we looked at too. Starbucks. Starbucks was the other one, right? I remember somebody asked for Starbucks. I'm just pulling them up, guys, as I remember them. Starbucks. Here we go. Here's the Starbucks trade, right? What did we talk about yesterday? We had that parabolic move to the top side, right? Parabolic move to the top side. What normally happens when you have one of those parabolic moves, particularly into something that is just absolutely crazy? We have a retracement, and what is it doing? It's pulled back down. And it looks like we're up here right now, but again, we pulled back down from the 79-ish area yesterday. We were back down to 76, so it was a $3 drop yesterday in Starbucks based off of that big move up. And again, emotional move up, start to push back down again. All right, so again, that was another one of the ones that we talked about being short for yesterday. And again, $3 is nothing to scoff at. That much of a drop. It looks like right now we're back up into the 70. Now we're back up in the 77 area, right? Pre-market, it was over here. So again, push up, continue push to the back to the downside. The other one was, I think, Ford, right? Because you were all worried about the Bronco, the new Bronco. It's not actually new, but let's see. No thanks. Let's see. Full featured. Let me drag this guy across. And there was Ford, right? There was Ford. There you go. Do we really have much movement in it? Not really. Push up, kind of push back down again. So, Ford, I would say, it's just more or less flat. It hasn't really moved in either of the directions that we talked about. Right there. Right there. Again, it pushed down. I mean, again, it turned off a level, but I wouldn't say it was a great level or anything. I mean, heck, it's a deal. I think if you can get it to come back down again, I think your buys are much better, opportunity there. Yeah, we had that big candle. I remember this talk now. So yeah, but like I said, what I tell you yesterday about Ford. Ford is going to be what? A stimulus play. We don't have any stimulus news yet. We need the stimulus news. That's what's going to cause this sucker to bounce. People need money. Once people, get that stimulus check, then that's where autos will come back in again. So nothing else in there. What else we got? Let's see. Did not reach target completely, but it's so shiny. Gold. Freaking old Dodge. Yeah, the Dodge. You mentioned front run when you were looking at one of the stock indices. Can you explain? Oh, what do I mean by front run? Sure, absolutely, I can. So basically, let's say that this is a level, right? Okay. I'm not saying that this is where I would do it from, but I'm just saying if there's a level in here where we've seen price, we'd be like, say, hey, listen, we know buyers have stepped in and I'm willing to get into this position. What happens when you're front run is price will make it down to like here, right? It gets almost to where here. I'll make this darker for you. Price makes it to there. And all of a sudden, price takes off and it goes like this, right? So what happened is if price was getting into this zone right here, you're willing to get long, right? You're basically saying, hey, listen, if it comes to here, I am willing to get long this position. I'm willing to buy it. I've seen buyers do it before. It gapped there. I retested it, tested. And again, launched itself out of there again. It's an area where buyers are. I'm willing to get long. But if you just miss price, what happens is you got front run, right? Big business knew this. So this is where I guess the best way to explain it is have you ever heard of level 2 data? You'll see people out there like, oh, I use level 2 data. And they feel like they're really, really smart. So here's so you can see the orders that are in the system, but in reality, you really can't see the orders that are in the system for buys and shorts. I don't know if you remember a couple years ago that Goldman, I think it was Goldman took a really, really big loss, a huge loss. And the reason why they took a really, really huge loss is because the market found out that it was their order. Okay. If you know that Goldman is willing to buy something or sell something at a specific level, what would you do with that knowledge? Think about it. Goldman has billions of dollars, right? They are going to buy. They're like, hey, if the price hits X, I'm buying. What would you do with that information? You would put every bit amount of money you could before their entry. You would, in essence, you would front run their position. Okay. Now, that's what makes this a little bit more difficult, and you have to add buffers to it. Again, in a computerized age, this is why floor traders, don't do well these days. In a computerized age, computers can put orders in and take them out of the system before we can even blink an eye. It can happen that fast, right? It doesn't necessarily matter, but that's why your analysis has to be good. So it's one of those things. It sucks when it happens. But it's going to happen. There are times where you'll have 3, 4, 5 positions that all get front run. Basically, what it means is you're getting really, really good at finding where those hidden orders are in the market or in a chart. And if you're getting front run, you're like, yep, maybe I need to adjust my entries a little bit. I need to get whether wait for confirmation, or again, maybe I just miss out on some trades. It happens. It sucks, but nothing else you can do about it. What are we doing? You'll be anticipating to make it early, willing to be wrong. Yeah, you're anticipating and willing to take a bet. Yeah, and you can. Like I said, it's always good to have buffers. These are not fixed lines. Remember, a misposition is as good as a trade. Yeah, you don't lose any money. Yeah, exactly, James. Yeah, James hit it on the head. Remember, a lot of times, guys, I'll set a trade. And I'll say, hey, listen, you know what? We've hit here a few times. And again, I'm just using this as a teaching example, guys. I'm not talking about shorting Ford or anything like that. I'm just saying, as a teaching example, you'll say, hey, listen, and I'll say, listen, this zone has been hit multiple times. I'm waiting for a failure. I'm looking for something like this, right? I'm looking for that. And again, I'm not saying that in Ford. I'm just saying when you guys see me draw zones like this, if it comes down and it does, if it does come down and it bounces, and it does this, and I was wrong in my assessment, does it matter? The answer is no, right? I'm an if this, then that trader. I'm not a, looking at the chart right now, I'm going to rub my crystal ball and genie lamp and I'm going to say I'm going short. No, that's not how I trade. I'm willing to take defined risk, a predefined risk before I get into the trade. And if this happens, then I will do that. By doing that, it removes emotion, it removes bias, it takes everything out of the trade. If I get front run on my entry and I was wrong and it goes higher, who cares? Did I lose any money? No, I didn't even get into the trade. But I had a plan and I had a set of rules that I was following. That's why that's why I'm able to remove emotions from trades. If it does this, great. If it doesn't do it, great. I don't care. In my assessment, if it was wrong, don't care. You know, it's one of those things, guys. Again, remove as much emotion from this as possible. You should never look at the earnings and say, oh my God, there's earnings right here. Oh my God, well, in the past, earnings has done this, because you're just making a guess. You're just making a guess, and again, am I making a guess here? Sure. I mean, but I do have some proof. It has hit. It has hit. It has hit. If there was no buyers here, price would have went lower, right? It's not me guessing. It's me saying, hey, listen, there are buyers here. Something like earnings or something like, oh my God, a news release came out. That's emotion. That's greed. That's fear. This is not. This is just saying, hey, listen, prices hit here. Prices launch itself off. If there were no buyers here, price would have kept continuing to fall. But buyers were able to step into this market. So again, it's just different levels of trading. So again, you just gotta need to make sure that you're not getting kind of front run and all that kind of stuff. Oh, I got another update. I hate when Google has to update. Like whenever you see this green arrow, you're like, yep, Google's gonna steal some more information. Don't know what it is, but we will see. So, all right, guys. So that's it for today. Let's go ahead. I forgot to do the drawing yesterday. Let's go ahead and do the drawing. Debbie won again yesterday. We got 8 people in. Remember, guys. Every day we do a bit of a giveaway. The giveaway is for Pip Chips. Actually, tomorrow, guys, I'm going to do a giveaway for a weekly newsletter. You'll get 4 weeks of the newsletter that will give you levels over the weekend, curves, biases, breakdowns of currencies, commodities, and indices. So tomorrow it will be for a 1-month subscription for free, obviously, to the weekly newsletter that I put out on Sundays. But everybody can get access to this. Basically, ! ticket gets you in. You get 25 Pip Chips for the victory number 2. It is 100. For victory number 3, it is 250. Debbie has had 2 in a row. So Debbie is like kind of loading down right now because she got 100 Pip Chips yesterday. With her second victory, if she wins today, she gets 250. And I don't think we've actually ever had a 250 winner, but we'll see. Yeah, we'll see. So I'll give you guys to 116. What you guys can do with the Pip Chips, you can do things like mentoring sessions, 101. We can do breakdown analysis. We can talk about stocks, options, futures, forex. I will say, if you are a penny stock guy, I can't help you as much because penny stocks are so manipulated. They don't follow the traditional rules of supply and demand. Institutions don't trade them, and I am more of a how to trade like an institution, not a how to trade like a penny stock guy and hope that things go in your favor. But again, we can talk about any of the different markets. Again, it can be my strategy, your strategy, any strategy you'd like to break down and kind of, dissect we can do. All right. So I'll give you guys about 40 more seconds, about 30 more seconds, and then I will close this one down. And then we'll get started. We will be on tomorrow again, 8 to 9-ish. Fridays, you guys know I don't like to go on as much. Again, the Friday news for tomorrow is this. Right. So there'll be 8:30 again. I think this one tomorrow morning. First thing we're going to do dollar CAD and we will do CAD yen. So that way we were prepared for the CAD release. CAD yen would probably be the better one to do that one. But 23 minutes ago, Trump calls for election delay so people can properly secure and save. Oh, here we go. Media is going to have a field day with this one today. Oh, this is going to be interesting. Universal mail-in voting, not absentee voting, which is good. Yep. It's going to be a fun day for the media. All right, here we go, guys. Let's close it down. Let's see who the winner of today's drawing is. Looks like Debbie is in for the most. Ernest went 2, Will went 2, and Wealth Builder went 3. Wealth Builder has actually been the spoiler lately, so let's see if Debbie can pull off 3 in a row. Today's drawing. If Marina wins with 1, I'm going to absolutely just, I'm going to die laughing. I will literally fall out of my chair. All right, here we go. 3, 2, 1. It's Debbie. Congratulations, Debbie. That would be 3 in a row. That gets you 250 Pip Chips. I think that may be the first. It's either the first or the second, but look at this. Here is the leaderboard. Debbie is right here, and Debbie gets her 250 for her third win. Bam, look at that. Debbie just passed Marina. Look at that. Man, Debbie is driving. Like, if I feel like I need one of those like arrows up in like the last week. Debbie's gotten 350 Pip Chips, I think, in the last week, or pretty close. No, more than that. 450 almost. She's making a run, guys. So Ernest, pretty soon it's going to be Debbie you got to worry about, not Marina. And she did it with just 5. And like I said, was that a good risk to reward, guys? She risked 50 pip chips to make 250. Good or bad risk to reward ratio? I'd say it's pretty good. All right, so oh my God, rigged. wait, what? Rigged is a Democratic primary. The Democratic primary, yes, very much rigged. Yeah, it'll be interesting. And actually, to be honest, I actually don't think that doing the mail one would be bad. Because I'll tell you right now, if you say all of your ballots should be received by this point, all your ballots are out. They could literally tie it back to a social security number. If there's fraud, you're going to know because there's 2 different ballots in for the same person, right? And again, there could be a legitimate recount. You could legitimately, again, it may take a little bit longer if it's a really, really close election, but you could legitimately make sure that every single person got an actual chance to vote. You could make it the fairest election we've ever had by doing it that way, and probably the safest. Anyway, I'll catch you guys tomorrow. Again, 8 o'clock tomorrow morning. We will jump back on, and again, we'll do an analysis. And again, tomorrow, guys, Fridays, if you guys want me to look at any stocks, again, we can do, like I said, I've been debating throwing in kind of like a stock hour or something like that. Maybe we can start timing it on Fridays where we can start looking at different stocks. And, first things first, though, I'm going to give you guys a stock scanner. Again, you want to make sure the companies have a specific set of guidelines to follow. If they don't, again, they're too there's too many gaps. They're too volatile. Not enough volume, can be too easily manipulated. Not really worth your time. Do the bigger ones. And again, I can give you guys a free stock scanner for that. All right, so I'll catch you guys tomorrow at 8 a.m. Good trading today. If you need anything, go ahead and join the Discord channel. It's absolutely free, and you're more welcome to ask questions in there. You guys take care.